There's the impact of Hurricane Beryl, of course, felt throughout several sectors. We're going to look at how the stock market, how the market reacted to Hurricane Beryl and some of the impacted companies. So, what do you have for us first?
So I guess we can just, look at the impact to the market. So I can't bring up my laptop right now, but if you took a look last week, so last week of June, going to June 28th, so that would have been June 24th to 28th, you saw a significant amount of value traded in the market. On July 2, which should have been, the day before Beryl is supposed to arrive, you saw literally a very muted, stock market for the day. What do I mean by that? You saw very little trading. And when I mean little trading, let us say you probably see net stock trading for the day. You probably saw a lot less, and even the stocks that were trading, you probably weren't seeing trades of more than $1 million in value for most stocks, and that was on Tuesday. Thursday, similar thing. That would have been influenced by the fact that some persons would have been out light. So coming into this week, there's still a hangover of Beryl in the sense that some markets have been closed last week, Thursday, and then persons are coming back online or sorting out their lives accordingly. So, from a stock market perspective, you're seeing a reduction in trading value. Key point, I didn't say volume because that's an entirely different part of the equation. The value traded, dollars and cents, that's significantly down. And if you look at just the week before, you're even going back even a year, it's an entirely different story. So that just show you that a hurricane in this case, based on what happened, would have put persons in a little bit of a distracted spot alongside the impact of not having electricity because while we can still contact our brokers via email and so forth to put in orders, for many persons, if you don't have light, you're not going to be talking to your broker about stocks. You're going to focus on, hey, I need to go charge my device. I need to go take this tree off my house or get my road open.
Exactly.
So, so that's from a stock market perspective.
I think about a company like, said, Jamaica Producers, and we hear, how much the banana industry took a hit. They produce St. Mary's bananas. How can you take a look at perhaps individual companies that are listed that might have been affected?
So there are different parts of the spectrum, Kalila. So let me give some context, right? So for some companies, such as your Grace Kennedy, your Lumber Depot, Dairyman, those distribution companies, separate. Those companies are in distribution space and manufacturing space, or even just regular retail or hardware space. They saw a significant uptick in business, over the 2 days before Beryl, and in turn in the subsequent days afterwards as a result. What do I mean by
Right.
that? So PriceSmart, person said that PriceSmart had they know PriceSmart that packed, and that's for Riddles. And remember, they expanded PriceSmart to have an upstairs, and it's still a choke point. Like if you went to Google Maps, you would have seen that it was an entirely red road, which was the Riddles around PriceSmart. Even the PriceSmart is on the JSC, they distribute a lot of Jamaican-based company products. So your some CPJ products, some Grace Kennedy products, probably some Honeybun products, but you get a picture. Supermarkets as well, were empty. Like you saw memes on Instagram or on social media of, nobody buying the wheat bread, but
Mm-hmm.
you still saw the shelves were empty. So if you're in manufacturing or distribution, those company spaces, you had a grand time last week in the sense that for you, your inventory sold off like wow, you're struggling to just meet up with the demand for persons in the marketplace. And now some of your same clients can potentially pay you down earlier your receivables, which you can take that same cash to put to other uses. So that's just to kind of show you that the food manufacturing hardware space, like they had a pretty good time just because of the nature of what a hurricane requires in terms of a reaction. And we're
I
now
hear
seeing
ice
industry.
is, I hear ice is one of the hottest commodities right now, David.
It
Ice
is
selling
bar.
out everywhere. Richie
It's a
went to
no.
buy ice and they said you have a maximum of, I think, 2 bags per person for ice, so he made the receipt buy one.
No, but it's a bartered commodity now, and that's
Mhm.
just the we no longer have a I-assisted company, JSC. When I invested in the JSC, there's a Montego Bay company that used to, be listed in the I space, no longer the JSC, but yeah, post hurricane, you're seeing, persons purchase products carrying St. Elizabeth and other affected areas on the south coast. So in the food space, like, it's mixed with respect to like your general insurance. Key point: general insurance. A lot of people confuse this, but let me clarify. You have life and health companies, life, health, and pension, your life insurance, your health insurance, the persons that manage your pension fund. Those are life, health, and insurance companies. An example: Guardian Life Limited, Sagicor Life Limited, right? General insurance companies are the ones that deal with most of the general associated risk that we tend to focus on when it comes down to insurance companies. What do I mean by that? So your Advantage General, your Guardian General, GK General, in terms of motor, property, maritime, fire, liability, those are your more associated insurance companies that most people should interact with, in a sense, because you do need motor insurance drive on the road. Whether you buy it or not, or actually renew it, that's up to you, but most people are supposed to interact with those companies. Their impact is yet to be determined, and it's two sides of the coin. And let me explain that. So earlier I mentioned, most persons should, keyword should, interact with a general insurance company because by law you're required to have motor insurance. But we've seen from a couple of years ago from different media publications that they check TAJ records. Let us say there are 1 million persons on file registered on TAJ with vehicles, right? You're probably seeing 500, 600,000 drivers with insurance and the Insurance Association of Jamaica side. So that's to show you that even though motor insurance is mandatory, you still have that level of, I should say, non-participation to use motor insurance. So it's not likely going to be the similar case for property insurance. On the property side, I've heard it before, even Garden Holdings Limited CEO Ian Shinapua said that Jamaica is underinsured. I recall at a general accident AGM, Paul Barnaby Scott, PB Scott, mentioned how Jamaica is underinsured related to Trinidad in terms of insured assets. So it's kind of hard to really gauge that impact because I recall even in prior storms or flooding events, some insurance company said, hey, spaces that persons would have seen the most damage or destruction were not really insured by the insurance companies, in this case, general insurance companies. So for some persons, they would have contacted insurance companies last week, but that's for those who had light. They're likely to see more of the claims coming in over the next 2 weeks. A person is assessed, determine damage, and so forth. But it's likely you're going to see some level of increase in claims, or in this case, insurance service expense by your general insurance companies during the quarter in Jamaica, and to an extent in the Eastern Caribbean for companies that have Eastern Caribbean exposure. So for example, Guardian Holdings Limited has a Eastern presence in Eastern Caribbean, alongside general accident, which is exposure in Trinidad and Tobago and Barbados. So as I say, it's a little bit mixed because most of them are just associated on the south coast. But in Kingston, for example, the most the person's complaining about was probably some damage to cars or just minimal levels of damage. But it's not like you're hearing houses, destroyed, roofs gone, like as you hear in St. Elizabeth. So that's why I say it's a very mixed, situation where you can't really determine as yet without having the claims come in first, and behind the IAJ side, Insurance Association of Jamaica, to really understand that level of impact. So that's from the general insurance company side.
I know the bad thing, David, is that we were already reporting that insurance rates are going up. And now you have a disaster like this, giving them more justification or more reason for wanting to raise rates even further.
Well, there are two ways insurance companies make money, Kalila, right? So you have underwriting income, right? Which is insurance company collects a premium, pays out expenses. What you left behind is either a profit or loss. So your underwriting income, that's one part of the way insurance companies make money. The other way is through investment income. So they invest into stocks, bonds, different kind of assets that bring in income, which affords them the ability to pay claims and remain profitable. With respect to the motor and property insurance side, let me just give some relevant context so that we can all appreciate why insurance companies in this case have increased rates or premiums so much over the last 2 years. On the property side, right? What you tend to realize is that most insurance companies in Jamaica don't carry all that risk on their proprietary books. What they will do is that they'll insure it with another particular reinsurer, right? So basically, the insurance company collects, let's say, $100 worth of premium from you, right? They probably cede $80, $90 of that money to a reinsurer. So based on the agreement is structured, if there is a destruction of our property, for example, let us say it's no longer deemed suitable to live in or experience substantial damage from an earthquake or another natural disaster, the general insurance company probably would pay, just say, $3 worth of $3 of that claim. Sorry, $30 of that claim, and let's just say the reinsurer pays other $70 worth of the claim. So most of that risk is brought over to the reinsurer side. What has happened is that due to a variety of different events, inflation, reduction in reinsurance capacity, and so forth, what has happened is that reinsurers have looked at the region and said, hey, you guys are pretty risky, expensive, and so forth. We're going to reduce the capacity to you guys.
Mm-hmm.
What that meant was, for the general insurance companies here in Jamaica, they would have had to increase rates to account for that high risk on their books. Because remember, Kalila, a property that have cost, let's say, $20 million back in 2020, is already by that $36 million now. You have to insure the property for its higher value. And at the same time, you have to account for the fact that, hey, you have less capacity. So let's just say the burial caused much more destruction in Kingston in particular than expected, then that reinsurance, arrangement will be critical to, ensuring the company remains solvent and doesn't go under. So for
And
those who
with
don't
a
remember,
more active hurricane season, it's higher risk.
exactly. So the reinsurers increase the premiums and our insurance companies passed on to the customer. At the end of the day, their business they still have to be profitable. So for those who don't remember, Dial Group, they took a nasty term at Hurricane 2005, largely in the Cayman Islands, and they went under. So for general insurers, they need to charge appropriate premiums and business to remain solvent. Because remember, once the event that can trigger a claim is met and meets the other conditions of a contract, the insurance company should pay you out. Key point, should. I never said that they will, should. It's a conditional situation. On the
So,
motor side, here's probably
okay.
motor side now. With motor, we just drive terrible. No, no, that's
No
the
tolerance
simplest way
for
to say
bad
it, Kalila.
driving.
So
I think
let's
if
go
you
some.
can drive in Jamaica, you can drive anywhere in the world.
No, I agree there, but let me give some context, right? So on the motor side, here what happens. Most insurers have something called a loss ratio, right? That would be your claims divided by your premiums, right? For most general insurers, their loss ratios surpass 100%, which means that their claims surpass their premiums that they bring into the business, right? After accounting for investment income as well. So basically, what that means is motor is a business that doesn't bring in any money for most general insurers in Jamaica. So basically, general accidents, 2018 Alta Financials, before they moved into Trinidad and so forth, you would see going back over the years, they never made money on motor insurance. And here to other motor insurers, it's a similar situation. What used to be, or saving grace was that property insurance used to be so lucrative that as a result, it could have subsidized to an effect the motor losses. But as I pointed out earlier, on the property side, what has happened is that reinsurance premiums have gone up, people are struggling to pay, and the insurance companies are stretched in terms of how much more they can push their customers. And on the flip side, the loss ratio of most insurance companies has gotten higher because of inflation. So a part that would have cost $100 to replace, it's about $150 to replace now. So the accident happened probably January. You're setting the claim now in July for this argument's sake, and that part you're planning to just allocate $100 is now 150. So the loss ratios have gone up for most insurance companies, and as a result, that's why you've seen double-digit increases in motor premiums this year. So even though, you have, been good, not got any accidents on your due diligence and everything, the pool associated with that motor insurance book, has gotten riskier and more costly. So that cost has to be among the remaining clients on that book. So
Mm.
that's where, this context in insurance matters. So the hurricane being very active is a problem because, there's increased claims and payouts, but at the same time, it potentially could mean higher premiums next year when next year renewals come up. So this is just all to give context as to why insurance is such a very dynamic business. It's fun when things don't go, when you don't have any claims. It's another thing when those claims come much more expensive and more frequent. And then the third side, which is agriculture-based businesses, the ones I can think of right now are your GK and Spurtree. From that perspective, depending on where they source their products, let us say they source most of their products from St. Elizabeth, for example, that can be a problem because in St. Elizabeth, they're still right now
Oh,
trying to
I didn't
clear
even
the
think of
roads.
Spur Tree. Spur Tree is right there in Manchester.
Well, that's Spurtree Hill, but for sure, Spurtree is sourced from St. Thomas and other parishes, but in St. Elizabeth and the South Coast, the disruption in terms of supply routes, the potential damage to crops and all those other things can in turn mean a lower production and actually lower revenue. And in case of GK, there's also the other side of the equation that for some of their suppliers, they might not be able to supply GK with the same products at the moment, which might mean those products come available in the supermarket. Or if they do, or if they are in the supermarket, they're going to come at a higher cost. So these are some of the perspectives of how a hurricane impacts different businesses differently, because on part of the food side or retailer side or distribution and manufacturer side, they saw a lot of products last week because of the preparation and post hurricane damage. Insurers is a mixed situation. And on the agriculture side, we're seeing, an estimated $1 billion worth of damage in lost crops and products. And as I pointed out, that supply shock can lead to higher prices, which can feed into potential impacts on how the BOJ assesses its potential rate cut in the market. So all these things feed back into each other, and which is why people need to appreciate that I think anything happens to the overall economy, or even just a significant project like St. Elizabeth, it can ripple effects across the rest of the spectrum.